Hey everyone, welcome to the quick review. Doing it early this week because things are happening and I was waiting for the jobs data to drop and we had a huge miss on two fronts. This is NFP, so 105k expected. No, sorry, that's private. 110k expected and we got 73. Government minus 10k, private 83k, but expected 105. But that's just half of the story. The other half is that last month's 147k print, which was a bit, and everyone was kind of surprised that it happened, was revised down to just 14k. And May was revised down by 125k as well. So we just lost 250k jobs from revisions on the past 2 months. This one was a miss as well, and if the previous got revised down, this one will get revised down as well. And while unemployment came at 4.2, how they show the headline number is rounding up or down. Basically, anything that is uh, at zero point 0.5 or higher is the higher number. Everything that is below 5.5 is the lower number. And the print this week was 4.248. Had it been 0.002 higher, it would have been a headline of 4.3 in the news outlets, and algos would have reacted more negatively. But the point is that it was a very bad report. Like if J Powell would have known about this, probably he would have cut. But he was hawkish in the face. Like this is J Powell getting wrecked by karma, basically, being way too bearish and hawkish and getting this very negative report right afterwards. Now, we got faded yesterday, huge negative reversal across the board, which I did not see coming. Imagine how it would have looked without Microsoft and Meta and a few other names. It would have been all red and a complete bloodbath, which is what today is shaping up to be like. We have a VIX breakout. Initially, yields went lower, but they reversed on the negative data. And if you remember last year, we had a growth scare at the same time. The correction we had in August, July, August was also because of bad jobs data. And we had this first part, which was giving us a bounce on the 55 EMA here. And then I think this was the second report, and we dumped even lower, and we made this drop here from for the full leg down. And now we are also in July, end of July. We have a engulfing red candle here on the 21 EMA on the daily, and we are opening. Oh, sorry, this is the 13 EMA, and we are opening below the 21 EMA today on negative jobs data. And things are a bit unpleasant. Like I could see various scenarios. Now, I still think we will get to 650 by end of September. So um, this is based on ATR levels. We have that Golden Gate rule triggered. This is the quarterly ATR levels, and we had a move higher. Then we hit the 0.23, and by this rule, if we hit this level, we will hit this level at some point during the quarter. The quarter is by end of September. Most likely it's going to happen sooner rather than later. But I still think once this correction is done, we will push higher and go to 650. Now, coming back to where we are right now. We have a couple of levels. Actually, no, that's fine. We have a couple of levels. The quarterly open. This is the 44 EMA. This is the 30-minute chart with the ribbon for the daily. In case you didn't know, you can change this from settings. So you can use any time frame and then force the ribbon that you see on the daily or the weekly or the monthly or the 1 hour or whatever. So you can do this. So this is the 30-minute chart with the daily ribbon. And since we are on the 21 EMA here, uh, there's a good chance we get a bounce here. Considering the market is actually happy with this jobs report, but the market would have been happier if This jobs report came before the Fed meeting, and there would have been an expectation of a cut. This didn't happen, but the expectation of a cut will still come. So there's a good chance that we get a bounce here on the 21 EMA. We reconnected with basically the most important short-term moving average, which is the 20, and we could get a bounce here. Could be a dead cat one. Like if one scenario would be we go back here, we get rejected at the previous ATH, the 14 EMA, or basically we start turning the cloud red. I'll leave this. So basically we go up, dead cat bounce, and we go lower. And that lower is most likely going to be the quarter open area. If we turn the ATR, it's also, this was, the difference is the previous quarter closed a bit higher, we gapped down a bit and then went higher. So the level here, which is 617, 616, is where I think we are most likely going to go over the next couple of days. It's not going to be a slow drop. And at the same time, the 55 EMA is going to click, is going to go slightly higher like this, and eventually maybe catch up around here. So my main scenario is that uh, we continue going lower a bit to the quarter open, we bounce here, and then we go to 650. But again, that can be wrong. One would be in the way that this happens, like it could happen today or over 2 days, today and tomorrow, because this is Thursday. We still have Friday to go. Oh no, sorry, this is Friday. My bad. I don't know what day it is. So it could be very quick, like we go down, we gap down on Monday as well, down to here, and we start moving higher. Or it could be a slower process in which we go up, we get rejected, we slowly grind lower over the next couple of days, and let's say sometimes next week, like Thursday, Friday, we bottom and then we go higher. That would be the slower version. Or we just bounce here because the market will be expecting cuts now, and we just go higher and higher and go get that 650. But if we get that bullish scenario and if we go to 650 directly, meaning we get a bounce here and we start grinding higher and go get to 650 by August OPEX, like somewhere in this week, I think this has a chance of being a bigger top, like we actually get like 10% from this level. So yeah, uncertainty is high. All of these are valid scenarios that could happen. Uh, and I continue to be bullish for the longer run because earnings were great. Like even in the companies that dumped on earnings, I wouldn't say that we really saw negative earnings that would affect things very very badly. Unfortunately, the move we had here kind of broke many charts. Uh, Marvel is still fine, like it will just reconnect with this, but it faded all the spike from that news. Qualcomm looks pretty bad, but again, not the end of the world. It can still recover. Probably, let me see. Yeah, still in a good spot here, like in this area here. LSCC also kind of broke down back below the ribbon. I won't go through all of this, but the point is like many charts got broken by the recent moves. Like we had a lot of fades, like VFC, not Co. Which one was it? Oh, Bucks. So Starbucks gapped down up 4%, then faded completely and went even lower. VFC I already mentioned. UPS got destroyed completely. Many of these names they don't look as good technically as they did before. But if today we recover, it's a great sign that we can potentially go to this 650 very very quickly. Yeah, not a lot of clarity from my end, just laying out the scenarios that can happen. But I'm pretty confident we'll get a bounce here. Or at worst, if we let me try to draw it out as well. So let's say we get a pivot reshaping. So this would turn red. So this would look something like this. And this would look something like this. And it narrows out. Then it becomes negative here. So if we go here, we would still get a bounce like to 655. So we go to 615, let's say we bounce here and we go up, and then the ribbon area would become resistance. Obviously we can go a bit higher than this, or the 20, this would be the 21 EMA, something like this. So we go lower, we bounce, and then we go down to a retest, and maybe the retest is a bounce, or maybe the retest is a complete breakdown that we go below the quarter open. But the quarter open is the truly bearish pivot. Like if we lose the quarter open in a big way, meaning an impulsive big red candle that pierces through it and just drops a lot from this level, that's the reason to be concerned. Because if we do that, most likely we will double this. Oops. So most likely we will double this, and that would be the target of around the yearly open, like 580, 590, 585, something like this. So if this doesn't hold, we go down a lot, but most likely it will hold and we go to 650. And once we get to 650, if the growth scare continues, most likely we will get 10% from here. We shall see. Yeah, that's kind of it for now. Hopefully it helps, although it's not very uh, clear, but yeah, it is what it is. Have a good one. Bye bye.